Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Thursday, March the 14th, 2013. We're going to be looking at the Dow Jones Industrial Average today. I'm going to try to teach you guys something about the indicators that I'm using here. As you guys know, typically when I'm looking at a short-term chart like this is a 3-month daily chart. Typically I'll have the ultimate oscillator up here as the actual indicator that I'm watching there. It's really good for the short term for catching divergences and things like that, and it's actually good at catching ones that others miss and also calling BS on some that others would call. So it's a better indicator. But there is one indicator that I trust for this particular exercise that we're using, and that is going to be the RSI. If you're not familiar with that, you can go to our free website. Let me quickly go there and show where it's at. On the free website here at PerfectStockAlert.com, under the technical section, we've got all kinds of videos here teaching you different aspects of technical analysis as well as fundamental analysis. Is everything that I know. So if you ever want to know something, come here. Indicators and overlays, you click on that, it brings you to this page here. You can scroll on down, you can learn all you need to know about the relative strength index of the RSI. And this is just a video there to teach you everything you need to know about it. So let's go on to using it now, okay? Quickly go back there. Okay, the RSI I use on occasion whenever we get in these really excessively overbought markets or oversold market situations, and I use it for a particular reason. The RSI is really, really good at finding situations where your momentum is peaking out or where you're showing really strong momentum or really weak momentum. And there's different ways you can do that. I'm not going to teach you this all right now because I've already showed that video that will do it for you. But the main thing to point out here is that it's excellent at finding a market situation where you're running into the overbought condition up there above the 70 line. You see that, you can start to expect a pullback. In this case here, you get a flat line. Basically, we just consolidate while it kind of pulls this a little down. That's fine. That works too. And then we get up here and we do it again. And you know, after having 10 consecutive days to the upside in the Dow Jones Industrial Average, that this thing is coming. We're going to be seeing a peak out. That's fine. The reason why I don't use it on the short-term chart, you'll notice it does not give you a good signal for entering here. It never pulls back down here to the 30 line, which you typically with the RSI find your best entry opportunities like that. So it's not really great on a short-term basis. It can indicate things, but typically your other indicators, the ultimate oscillator and so forth and so on, will indicate them much faster than the RSI will. Sometimes the RSI won't even signal an overbought condition when you're peaking and stuff like that. So I don't use it a lot on short-term charts, and because I use short-term charts in most of my videos, we don't rarely see it on my work. So I'm going to show you one reason that I do use it, and that is for longer-term charts. The main thing to think about here when you think about short-term and long-term is that long-term charts have more data in them. That you have longer time periods for the candlesticks, you have more years to base the indicator off of, so you're going to get a better signal, a more trustworthy, a better quality of signal when you look at longer term charts, okay? Just keep that in mind. So on occasion I will go look at long term charts, and when I do that, then I go look with the RSI because I know it's the last one to finally signal. Everything else will have already signaled by the time the RSI does. So the RSIs are really good for long term. So let's look at long term. Alright, first off I'm going to change the time period from the candlesticks to change them to weekly, and then we're going to change, I don't want any months, let's make it out to years, go up 10 years, and we'll update that chart. Okay, here we are looking at the Dow Jones Industrial Average. This is going to be the weekly. It means every one of these candlesticks which you can't even make out are a week worth of trading activity, and you can see that the RSI, again, just plotted at the top here, whenever she hits the 70 line or above it, she's becoming overbought, and that's something that an area where you do not want to be buying, you want to be looking for a sell point or something like that. And you'll see that over here, that actually before this massive little correction we had here, let's see, we touched it a few times here, we had a little pullback here, again here, and this is just a topping, formed a head and shoulders pattern before the massive crash there, and then again oversold down below the 30 line. The RSI, you can see that we pulled down below the 30 line, and then back in the 09 crash time period, so you can see that this all right here was indicated as being oversold by that indication there. And then we get up here, when we hit this high point here, we sell off again here as well, sell off again, and now we're up there at 74.32 here. Would I be a buyer of this market? Not a chance. The reality is you will eventually pull back here, and that's a better opportunity to be a buyer. The thing I want you to know here, and I'm going to zoom in a little bit more on this chart so you can see it better, but the really way to know when the market has peaked is going to be when price proves it. And let me show you how to do that. Okay, and looking now at the Dow Jones Industrial Average, the only thing I've changed on this chart is I changed from weekly candlesticks to monthly. I've gone as far out as I could possibly and zoomed in as much as I could. So We got the clearest picture we can see here. And you'll notice now that we've changed it to monthly, we're hitting 70.08 instead of 74. So we can see that we're just now getting into the overbought condition on the RSI here. The main thing here, whenever I tell you we're getting overbought signals and you need to start looking for a peak, or when you get oversold signals, looking for a bottom, the main thing here whenever you're looking at these charts is to always trust price. Price is going to prove itself. So whenever you're looking at the chart activity, you always monitor. You had a nice little move here, pull back to low point, higher high, higher low. We're now trending this uptrend. This continues. As long as highs are higher, lows are higher, you're still continue this little uptrend. When that changes and all of a sudden you take out a previous low, then you're over. That's it. You've now shown that on the longer term chart, as well in the short term chart will also be showing the same thing. Both charts will be confirming that you are now breaking down, and that would then lead to, of course, this. All right. Over here, you can see the same thing setting up. We have this nice little move going on. We have higher highs, higher lows. Everybody's happy as long as that continues. When you start getting shallow little pullbacks, like you saw back over here and over here, this is when you start looking for, all right, I'm going to watch these low points. Whenever we see one low point get taken out, I'm going to get really concerned and exit the market if I'm not already out. Right now, just continue monitoring the low points. You can still play this to the upside. Next pullback, as long as the pullback is in control, and you get a little pullback here and starts moving the other direction, fine, be a buyer of that scenario. But when you take out a low point and you start to do like you did over here, be gone and start shorting. I'm not shorting right now. I'm out of the market. I'm just watching. But when I get a breakdown of the low points on the longer term chart, there will be nothing to do but sell, because your short term chart will already be doing the same thing as your long term chart. Whenever both those charts, the long and the short term, are telling you the same thing, you only have one choice, and that is to follow the trend, right? Okay, now you know. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.